Hey everyone, this is Ronak Ahuja. I welcome you all again. Do you also sometimes get confused on selecting the correct ITR form while filing your income tax return? If yes, this is for you. Whether you are a salaried person or a freelancer or a business owner, selecting the correct ITR form is very crucial from a legal point of view. With multiple ITR forms available on the income tax portal, choosing the correct ITR form can sometimes become overwhelming. In this video, we'll break down each of the income tax forms as well as the criteria for selecting each of the income tax forms. So without any further delay, let's quickly begin. Now before we discuss on how to select the correct ITR form, let's first discuss for what period are we filing this income tax return. For all the incomes that have been earned during the period 1st of April 2024 and the 31st of March 2025, the returns will be filed in financial year 25-26. This means all the incomes that are earned during the financial year 24-25, the returns will be filed in financial year 25-26. Now, the due date for filing the ITR depends upon the type of the taxpayer who is filing this income tax return. Which brings me to the first part of today's video. The first thing that we need to check is who is actually filing this return. In case it's an individual, the forms that are available to an individual are four types of forms: ITR 1, ITR 2, ITR 3, and ITR 4. In case the taxpayer is an HUF, then in such a case, three forms are available: ITR 2, ITR 3, and ITR 4. In case it's a partnership firm or an AOP or a BOI or an LLP, the ITR forms that are available are ITR 4 and ITR. If the taxpayer is a company, the ITR form that would be applicable would be ITR 6. In case it's a religious trust or a charitable trust or a political party, ITR 7 would be applicable. So, with this, we understand that there are different types of ITR forms that are assigned for different types of assessees. In case of individuals, there are four types of ITR forms that have been assigned by the Income Tax Department, namely ITR 1, 2, 3, and 4. So, in this video, we'll help you how to select the ITR form for filing your income tax return out of these four forms: ITR 1, 2, 3, and 4. Now, let's move to the second part. So, once the taxpayer is identified for whom we are supposed to file the income tax return, the next step involves identifying different sources of the income that have been earned during the financial year 24-25. With this, we mean all the sources for where the incomes have been earned during financial year 24-25. A list for the same will have to be prepared. And once this list is prepared, the list of income is then compared with the instructions or the guidelines set forth by each of these forms, namely ITR 1, 2, 3, and 4. So let's first start with the ITR 1. You can choose to file ITR 1 in case you have the following incomes. In case you have any incomes under the head salaries, that is, you earn a salary income, or you earn income by way of renting out of house property, that is a flat or a building, then in such a case you can still file ITR 1. In case you have interest from deposits with the banks, you can choose to file ITR 1. Furthermore, where in case your income includes any income which is exempt under the Income Tax Act, or an agricultural income up to rupees 5,000, then in such a case you will still be able to file ITR 1. Now, when can you not file an ITR 1? in case you have any income under the heads business or any incomes under the head capital gains. What do we mean by capital gains? Wherever you earn any income by way of purchase or sale of mutual funds or equity shares, or by way of selling of immovable property or any other capital asset, then in such a case, such income falls under the heads capital gains. And you won't be able to file ITR 1. You'll have to choose some other form. Also, if you have any business income, you will not be able to file ITR 1. Also, in case you have a business and choose to pay taxes as per the presumptive scheme of taxation, then also ITR 1 cannot be chosen. The other conditions that need to be satisfied before you choose ITR 1 are given below. You can quickly take a snapshot of these conditions. Moving on, let's move to ITR 2. Now, in case you were not able to file ITR 1 because you had income from capital gains, then ITR 2 is the solution. Where in case your income for the financial year 24-25 includes income from capital gains, then ITR 2 can be chosen. Income from capital gains means any income by way of sale of mutual funds or units of equity shares, or by way of sale of immovable property or any capital asset sold during the year. However, you will still not be able to file the ITR 2 in case you have any business income or income which is taxable on a presumptive basis. The other conditions that need to be fulfilled before you choose ITR 2 is given here under. You can take a snapshot of it. Now, moving on to ITR 4. Where in case you were not able to file ITR 1 because you had business income which was taxable on a presumptive basis, then ITR 4 is the solution. In the traditional method of calculation of profits for businesses, the total expenses was reduced from the total sales of the company. In that case, the entire records of the business was required to be maintained, and thus there was an introduction of the presumptive taxation scheme. The presumptive taxation scheme allows you to calculate profits just as a percentage of the total sales. All you need to do is just calculate the total sales of the enterprise and just apply a certain percentage on that total sales. The percentage that needs to be applied to the total sales to arrive at profits as per the presumptive taxation scheme are specified by different sections of the Income Tax Act. These include Section 44AD, 44ADA, 44AE, and a few other sections. However, you will still not be able to file ITR 4 in case you have business income which calculates profits as per the traditional basis. That is, by reducing expenses from the total sales. The other conditions that need to be satisfied before you choose ITR 4 are given here under. Further, you will still not be able to file ITR 4 in case you have capital gains income. You can take a snapshot of this entire thing. Now, moving on to ITR 3. Now, in case you aren't able to choose any of the three ITR forms that we just discussed, then ITR 3 is the only and the last solution available to all the individuals and HUFs. ITR 3 is one of the most detailed and one of the most lengthy forms available to the individuals or the HUFs on the income tax portal. We can also refer it to as the master return, as because we can report all possible incomes under ITR 3, namely salary income, house property income, income from other sources, business income which is taxable on a presumptive basis, or income from capital gains as well. However, please note, ITR 3 will not be filed by assessees who are not an individual or an HUF. This option is available only to the individual or an HUF. The new income tax forms for the financial year 24-25 have already been rolled out by the Income Tax Department. The rolling out of these income tax forms brings out certain major changes in the reporting fields. One such major change out of the many changes includes reporting of capital gains under Form ITR 1 and ITR 4. This is contrary to what we just discussed. We had discussed that we cannot disclose capital gains in ITR 1 or ITR 4. But with the recent amendment to the ITR forms, capital gains will now be reportable in ITR 1 and ITR 4. Now let's see what exactly the change is. What's the nature of capital gains that can be included in ITR 1 and ITR 4? All the long-term capital gains on equity shares or mutual funds can be included in these ITRs. Now, what precisely gets included in LTCG? All the profits from sale of equity shares or units of equity-oriented mutual fund constitutes the long-term capital gain that can be reported under these ITRs. What is the maximum amount that is permissible to be reported under these ITRs? The maximum amount permissible to be reported in ITR 1 and ITR 4 is Rs 1,25,000. Now, the next big question is, can all other capital gains be included in this ITR? Namely, short-term capital gain or long-term capital gain on other assets? The answer is no. Only the long-term capital gain on sale of equity shares or equity-oriented mutual funds will be reported in ITR 1 and ITR 4. So this was one major change. So this was a quick short video on how to choose your ITR form while filing ITR for the financial year 24-25. In case you couldn't follow, please provide us a feedback in the comment section or mail us at talklevies@gmail.com. Thank you and stay tuned.